Welcome back to the channel. If you haven't already subscribed, consider subscribing. We're on the road to 1,000 subscribers. It's going to be my milestone. I want to hit that by the end of the year. We're talking about the Halt strategy in this video. I'll cover what stock to pick, how execution, the rules that we need for this stock for you to be profitable. You do not want to trade every single Halt strategy. It's very simple, but there is a lot that goes behind each trade that I make using this strategy. You can make a lot of money with this, but you can also lose a lot of money. But let's go ahead and jump right into it. Now, before we can even jump into actually executing the trades, we have to actually find the correct stocks, and I'm going to show you guys a few different ways. So the first way, if you are on Thinkorswim, is you want to go over, well, first, if you do not have a watch list, let's say you don't have a watch list at all, you're going to come down to this little plus, and if you don't have this, again, click this little arrow tab, come down to the plus, and then I want you to click watch list, and then it will bring up one of these. Then you're going to go to day trade, or that's my watch list. It's my name for when I choose different stocks to trade for the day. But what you're going to do is click that. You're going to go to public and then percent change gainers, and then you're going to click it to where it shows us the most top gainers. And you'll be able to see that right when market opens. You'll be able to see the absolute best stocks. And you can see if I go to day trading, actually, where I found these before the market even opens. We can see we have DBGI, ZIVO, and they're all pretty much in the top 10 gainers. Now, if you want to find actually the best stocks to do the Halt strategy with, you have to find stocks that are usually gapping up over 30%, have great news, because you want traders and retail investors to actually jump in on the move. You want to be like, they have an FDA approval, they get a patent, they were approved, they get a really large sum of money, they are in the third phase trials. Any very good news, then that's susceptible for a Halt strategy play. Then you also want to look for high relative volume, at least 2x relative volume. And I have this indicator down below that tells me, okay, today's volume, GO, we have 3,845% more than the average daily volume. And then, so you want to have at least 100% on this. And if you want me to go over and how I got this indicator, let me know down in the comments below. To trade the strategy, you also want to have over 1 million shares traded, so you can have liquidity, so you can get filled at the right spot. Ideally, you want to have it over 5 million. Because the Halt strategy is very quick, I would not use Webull, I would not use Robinhood with this. TD Ameritrade is a little iffy with it as well, or Thinkorswim. So if you have Lightspeed, that is the best way to do it, because it's very, very quick, very instantaneous. Now, to execute the Halt strategy, I have a few rules that I usually go by. Never place a limit order 1% above the Halt level. So let's say, again, it halted at this level. Never place it above this $1 level. In this case, it's 12 cents. So I would probably, place it around 11.87 for my limit order. Now, as soon as we opened up all the way up at 12.15 from 11.79. Again, we gapped up around 3%. Your limit order, if you have a fast enough broker, you will get filled at your limit order at around 11.83. Now, immediately, it usually doesn't stay down there for long. So I usually only go in with, again, 3/4 of my position size for this kind of strategy. And then immediately after it pulls back and kind of runs after it opens, I usually sell 1/4 of my position. And as it comes out, I'm scaling out. It's more of a scalping mindset, because 5%, 6%, 7% is very, very, it's an amazing trade. So you scalp positions, and then your stops would be back below the previous low. And we can see that HLBC did not gap up significantly so it's obviously not a strategy that's looking to halt and then continue higher. And you could have also validated that. We have volume on this candle, and then lighter volume on this larger candle. See how it's double the spread from open to close, This candle is double the spread, but with lighter volume. That to me is telling me that buyers do not want to take this any higher. We did get halted, and we had extremely high volume with a really long wick to the upside. So since we had that decreasing volume, that would have been a good sign to tell me that, you know what, I'm not going to hold this for the room, maybe back up to 14. I'm going to scalp my profits and take 5-6% for this trade. And again, Halt strategies are extremely risky, because if you held this, came down, boom, get stopped out. Again, your stop is below the previous the halt level. So again, you're only risking around 1 to 2%, maybe even 3% if you have to. And you do not want to get caught halted to the downside, because it's usually they're low float, so they can move a dollar and then get halted to the downside and you're stuck. And there is a way to anticipate a halt if you do like halts and you'd be like, oh, I missed that halt. So let's go ahead and actually talk about how you can anticipate a halt. So as we see a candle's kind of pushing up, pushing up, pushing up, and you'll start to see a lot of green on the times and sales. Then you want to go ahead and head over to your NASDAQ level 2. And when I'm actually looking at the halt strategy, and if I want to anticipate this trade, I'm not looking at the charts at all. I have my cursor right on market buy for what I want to do if I want to anticipate it. So let's say I see how we have a 3, a 1, 1, 1, 2, 2, 1, 1, 1. You're going to start to see a lot of stacking. You're going to see like 500, 300, 200, 100, 500, whatever. You're going to see a bunch of orders start to stack and they're not going to get filled. And that's telling you that they're not getting filled on the level 2. So that's why it's stacking. And when they're not getting filled, it's usually about to halt. And if you start to see that, you can click market buy, try to get in so that you catch the move higher. We open up and you're already in the trade. You don't have to worry about getting filled at your price. You don't have to worry about the liquidity of the market. Again, this is very risky because it could come up, start stacking for a little bit, and then dump. So I would not do that if you're a beginner, but that is another way to actually capitalize on the trade. In this case, we had some slight pre-market resistance and yesterday's support at around $12. So that is one thing to be wary of. If this stock does not gap up significantly above this $12, you do not take this long. Buyers are not looking to bring it higher. If we have resistance, we want to see it pop above, open above, come back, retest the halt level before continuing higher. Let's go over an example. If we get halted at 1250, 1260, and we do not gap up above 13, I will not be looking to take the halt level longer. And a way you can kind of estimate where it's going to open up is if you look at the level 2. The level 2, again, we got halted here at 1178, and most likely the bid is going to be at 1178, and the ask is going to be higher. If you have a really high ask, that's good, but it's even better to have a higher bid. Let's say, again, at 1179, if we see a bid that's at like 1210, 1225, that's even better. We know that buyers will buy at that price, pushing it higher, wanting to push it even higher. And this usually happens on very good news. I don't believe HLBZ had good news during pre-market and after hours, but it was continuing and had momentum from the previous day. So I skipped to the current day of HLBZ, and I'm going to show you guys how to, instead of placing a limit order and a stop order and a take profit order, I'm going to show you guys a better way. So if you do not already have the template for Active Trader, again, Active Trader, you just click this, come over to the gear icon, and then make sure that you have that order template editor added onto your current set. Once you have that, you want to go over to TRG with bracket. Now your quantity will change as you change. In this case, I'm only going to do 1. Then for your offset, I like to risk no more than 2 to 3%. So I'm going to go ahead and click this twice to where it becomes a percentage, and then minus, so it's only 2%. And then I'm going to take profit at 6%. So I have a 3 to 1 profit loss ratio. So now that when I buy it, watch what happens. Fine, boom, I'm in market, and now my bid or my ask, or I got in at 210. That was a terrible fill. But look, it's perfect. Now for a halt strategy, these will be a lot closer together because the spreads, it's way more volatile. So it'll just look closer together, even though it is still 2% and 6% away. And again, if one of these gets hit, your position's closed and the other order is canceled, so you don't have to worry about getting in and being in a reverse trade. So let's go ahead and actually get out of this trade. This is very risky. Always have a trade plan and make some money. If you guys haven't already subscribed, consider subscribing. It's free and you can always change your mind. We're going to be covering a couple of different strategies over the next few weeks as I kind of dive into YouTube more. We're going to be covering what stocks are the best to trade, what is the best scanners, how can you find the stocks, basically everything for you guys to be a profitable trader. So if you want to stick along and take your trading to the next level, hit that subscribe button, and I'll see you in the next one.